Hi, folks. Welcome to The Way I See It, which is my podcast on all things money, investing, and of course, personal finance. Yeah, so I got invited to an investment club or like a room, and the guys were all sad. Apparently, had invested their monies in this online scheme. It was supposed to be like a robot that was going to trade for them, and they all just realized it was all a big scam. So everyone was like, very sad. How can we get our money back? But speaking to them, I did realize one thing that really these are like quote unquote were like amateurs or had not done this sort of investing before, did not understand the flags to look out for, right? They asked questions, the fraudsters told them, hey, we're registered with the Corporate Affairs Commission. We have a central bank license. We have an EFCC authorization. That's the Economic and Financial Crimes of Nigeria authorization and all that. So they were, they felt a bit comfortable and they invested in this through the uplines in quotes. So there was someone that, you register through someone and then you get a referral bonus if you get more people. And of course, if you refer more people, you get more money apart from the investments you have made. So it was a scheme, and I just said, okay, hey, why don't we just do a podcast just to explain to folks what to look out for, right? If you get an offer, what should you look out for, right? So there are just three things I would say that you want to keep an eye out for. One is registration. Two is the custodian. Where is the custodian? Where are the funds going to be kept? And of course, take a peek at the investment returns, right? If it's what should you look out for if someone offers you something I think is outrageous. So I think first of all, let's define what a Ponzi scheme is, and what a pyramid scheme is. So Ponzi is after Charles Ponzi, right? It's a fraudulent scheme that offers you very, very high rates of return. But the returns are not paid by investing your deposits or investment, but they're really paid by taking the deposits of new investors and paying to the earlier investors. So it's just a scheme, and they take the money from the new guys and pay the old guys. That's how they can afford the high interest rates. And it essentially stops when there are no more new investors to the scheme because the Ponzi just dies a natural death because then it can't pay itself, right? So a pyramid scheme is almost like a Ponzi, right? But a pyramid scheme is you're recruiting new investors, right? New investors, right? But the Ponzi is that you are actually selling a product or a service. But they're all essentially the same thing. It's getting new folks to drive up, should we say, the referrals and get paid. So always be suspicious if the investment in quote scheme involves you referring people and getting paid that referral, and you get a lot of money if you refer folks to that scheme, right? Always be very wary of those kind of referral schemes, especially when there's nothing being sold. If you're simply told, hey, pay this amount and then go get three people and then we'll pay you $100 or get four and pay you $100 and you rise up the ranks. Be very, very careful about that. So the first thing we're going to talk about is registration, right? So if it's a security, i.e. if the company is selling securities or making an offer to the general public to invest in securities, then they have to have a Securities and Exchange Commission license, i.e. a SEC license, right? Simply having a CAC, which is the Corporate Affairs Registration, it's not sufficient. The CAC will register every company, right? So if you're a bricklayer, if you're a typist and you want to have a typist company, the CAC will register you, right? But the Securities and Exchange Commission will only register you if you go through those processes and hoops. You show your management, your office, and that you have the capacity to manage funds, then you get a Securities and Exchange Commission license. So remember, like the Central Bank of Nigeria does not regulate securities companies. Same thing with the Economic and Financial Crimes Commission. They don't regulate securities. So securities are bonds, shares, all offers, crowdfunding, all that kind of stuff is really, really done by the Securities and Exchange Commission. So you want to ask the company, do you guys have a Securities and Exchange Commission license? You want to ask and you want to get an answer. If they give it to you, go online to the SEC's website and make sure you are able to verify whatever they give to you with what's in a line or online. So the SEC website is www.sec.gov.ng. That's sec.gov.ng, and you can go on and find if they are really registered with SEC. So that's the very first thing you want to do. You want to look at the registration and ensure that it's legal and it's up to date and they are literally allowed to get funds from you. And so what about crowdfunding and all that? They're not really companies, but a guy wants to crowdfund and raise money for someone, right? So same thing, like SEC also has guidelines for crowdfunding, right? So the company has got to be incorporated in Nigeria for a minimum of 2 years, and less than if they have a strong technical partner, they can do that for less than 2 years, but they have to be incorporated, right, to be able to do crowdfunding, right? So that's very, very important as well. What about cooperatives? So cooperatives, right, they are registered at the state level, right? And they are licensed by the state, by the governor via the director of commodities, right? So multi-purpose corporations and all that, they are also registered, but not by SEC. So they have to have about 10 folks minimum to start a cooperative. But still be very careful, also do your due diligence and ensure that they also have their registration. So the first thing is to look at the registrations and make sure that they're all up to date. The second thing is custodial relationships, right? What that means is that who is holding the fund that you're going to give to these folks. SEC laws now mandate that all collective schemes, i.e., anybody like in the stockbroker or going to manage your money for you, has got to have a custodial relationship, meaning they give the funds to a trust company or to a custodian to hold in custody on your behalf. So they can manage your money, but the actual physical funds are with the third party custodian. So a bit of safety there, right? So ask that question: who are your custodians? Where is the funds going to be kept? And those answers will always give you like an indication if that company is or not up to speed with set regulations, and it can raise red flags for you. So always ask who are your custodians. If they say you don't have a custodian, say why not. Sex if you have a custodian, and then that sort of leads you down to find out a lot more about them, right? So the first is registration, the next is custodian. The next you want to talk about is basically the outlandish rates of return, right? And so I'm not going to give you a specific number, but the way you want to do this is to ask yourself, what is the safest investment in whatever country you're in? So if you're in Nigeria or in any part of the world, the safest investments are always going to be the investments done by the government, right? So when the government borrows money from you, they issue you an IOU. That IOU is going to be called a bill or a bond. Bill is just for 90 days. Bond is going to be above 1 year, right? So you want to find out, excuse me, you want to find out what rate is the government paying on its own borrowing. That becomes your base level, your safety level, right? So anybody else borrowing that is not the government is going to pay more than that, right? So the Nigerian government is borrowing the lowest risk in Nigeria, right? Which we call the risk-free help, they're going to borrow anywhere from 1% to about 4%, right? That's for the year. That's what they're going to pay you if you give them your cash, 1% to about 4%. So clearly, anyone that is not the government that has a higher risk has to pay you more. So they might pay you plus 4, 5, 6, 7, even 8, and all that. But when you start to hear 10% per month, right, that's so way out of the spectrum. The government is paying you 3% for the entire year. If someone is offering you, say, 10% for a month, right, that's going to be almost 120% for the entire year. You want to ask a bit more questions, right? Because it's so out of the band. So it's very important that you know what the risk-free rate is, and so you can have an idea of if the rate being quoted to you is really, really out of the band, right? And most importantly, guys, I would just say go online, do reviews, ask questions, ask your friends, about this company before you invest. Take your time and ask a lot of questions. Don't invest in silence, right? Do all that background research, trust but verify, right? Don't just give anyone money. So just to summarize, guys, one, registration, two, custodian, and of course, three, you want to look at the rate of return. If it's too high, if it's too good to be true, it usually is too good to be true. All right, guys, stay safe out there. I'll see you guys again. Go to a website if you want to get more information or listen to this blog. That's www.kaluaja.org. I'll see you guys soon. Take care and bye.